Vodafone Idea, India's third largest telecom operator, is back making the headlines, but this time for its follow-on public offer of a massive 18,000 crore rupees. Before we get into the details, let's understand this concept. We've heard about IPOs several times, which is a process through which a private company raises funds by offering its shares to the public for the very first time. On the other hand, a FPO or follow-on public offering is the process through which a company that is already listed on the stock exchange raises additional capital by offering its shares to the public. So back to the story. Vodafone Idea, which is already listed on the market, is looking to raise from an additional 18,000 crore rupees from the public. The issue opens for subscription today and will be open up until April 22nd. It has fixed the upper price band of 11 rupees per share. Similar to an IPO, for a retail investor, the minimum lot size would be 1,298 shares, translating to a minimum investment of rupees 14,278 rupees. This FPO has the following reservations: 50% for qualified institutional buyers, followed by 30% for retail investors. Following the FPO, the shareholding of the promoters will drop from 48.75% to 36.87%. So what are the objectives of the issue? The company plans to use the money raised for network infrastructure improvements, including setting up new 4G towers, expanding existing ones, and even building and setting up new 5G sites. Second is, the money will also be used for paying off outstanding dues for spectrum to the Department of Telecommunication and GST thereon, and lastly, for general corporate purposes. Before we get into any more details, let's look at the business overview of the company. As you're aware, Vodafone India and Idea Cellular merged back in 2018 to come together as Vodafone Idea and emerged as a leading telecom player in India, offering voice, data, enterprise, other value-added services and digital services across 2G, 3G and 4G technologies. Though the merger initially was a game changer, making it the lead player in the telecom sector, boasting a market share of 36.5%, it soon had troubles one after the other. As you can see in the chart, in October 2018, Vodafone Idea was the leading player, but there was another mammoth of a player emerging, with Reliance Jio quickly rising to fame. According to recent figures, as of February 2024, Vodafone wireless subscribers' market share has significantly dropped to 18.93%, which is close to half of the market share it had in 2018. Reliance now leads the pack with 40% market share, followed by Airtel at around 33%. The advent of Mukesh Ambani's Reliance Jio, the financial woes of Vodafone Idea piling itself on massive debt, and the COVID pandemic, which forced network rollouts to stall and subscriber acquisition to stagnate, eventually led to Vodafone's supremacy fade away. But how are the financials of Vodafone Idea? As you can see on the chart, the revenues for fiscal year 23 came in at 42,488 crores in fiscal year 23, higher than the previous years, primarily due to an increase in prepaid tariff rates and additional 4G subscribers during the financial year. What's impressive is that the company exhibits strong EBITDA margins, translating to almost 40%, showing good operational efficiency. But when looked at the bottom line, the losses widened to 29,300 crores for the fiscal year 23. Financing costs, which usually indicates the interest payments, rose to 23,354 crores for the same year on the back of deferred interest payments and one-time spectrum changes during the financial year. A key metric for the telecom industry is the ARPU, which is the average revenue per user, which is recorded at 135 rupees, while Jio and Airtel exhibit 179 and 193 rupees of ARPU respectively. An important point to highlight is that Vodafone Idea has incurred significant indebtedness amounting to 2 lakh crore. In fact, 97% of the total loans are owed to the Indian government in the form of AGR liabilities and deferred spectrum payment obligations. But that's not all. On February 7, 2023, Vodafone Idea allotted 16.13 billion shares to the Government of India, converting the previous adjusted gross revenue or AGR dues until fiscal year 17 into equity shares. Following this allotment, the Government of India now holds about 32% in Vodafone Idea Limited, making them the largest shareholder in the company. To conclude, if the FPO goes fully subscribed, it would provide huge financial relief to the company and enable it to invest and expand faster in its 4G infrastructure and setting up 5G infra, which is in need of the hour when compared to peers. The money which is coming in would help the company to overcome hurdles, roll out 5G and improve its operational performance, which can lead to better growth possibility in the competitive landscape. However, it's not all rain and sunshine. Vodafone faces intense competition in the Indian telecommunication industry, primarily from companies like Airtel and Jio. Additionally, the financial woes in the form of debt payments, the ongoing legal proceedings could potentially divert its resources and have negative impact on its reputation and financial health if outcomes turn out to be unfavorable. From an investor perspective, the FPO will lead to huge equity dilution to its shareholders. Now only time will tell if Vodafone Idea's bet pays off, allowing it to compete in the highly competitive Indian telecom sector. Having said that, this is me, Rahul, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com